Good morning, traders, and welcome to this live intraday strategy webinar. Today is Wednesday, April 5th. Michael Boutros here with you on SB Trade Desk. Good to be with you guys this morning. Ziad, Pooja, Pete, Mark, Kazaa, Horace, good to see you back in the room. Graham, Gary, good to see everyone here. So, let's jump right in. We did just get the release of the ADP employment report here in the United States, coming out stronger than expected at 263. But a couple of things I do want to just note as a caveat. You did see a pretty steep downward revision for the previous read from 298, which was a blowout number, to 245. Again, this month also topping expectations at 263 versus 185. I tweeted this earlier, but I just want to put a caveat, guys. The ADP employment report is specific to private sector employment, and it is notorious for missing larger swings in the more encompassing non-farm payroll report, whether it's on the upside or downside. So I see some tweets going online of people saying it bodes well for NFPs, we should see strong NFPs, and generally speaking, yeah, they will move together. But trying to staple a strong ADP or a strong NFP report based on this might be a stretch. So just something to keep in mind. We want to pair those expectations for Friday, but certainly a strong read today at 263. I also did want to bring into your attention, we do have ISM non-manufacturing composite. That's at 10 o'clock. Might be a decent read. We are expecting a downtick from 57.6 to 57. As it pertains to the oil trade, certainly crude inventories at 10:30 is going to be a market mover as well. So keep your eyes glued to the oil charts as we get into that release. We will go over prices today. Okay, on the menu for today, I have DXY, Aussie, Aussie Yen, Sterling Dollar. I know it's interesting, but Dollar ZAR and Silver from last night. Previous report, we'll touch base on Euro, Euro Key, Euro CAD, Euro Oz. Pooja, I got your Euro CAD, sitting in a Euro CAD short from 141 and Dollar CAD from 134.36. I'm still in the Dollar CAD with you as well. Euro Oz I have on the list. Let me add Dollar CAD. And Euro Oz we got. Okay. Obviously, we'll touch base on crude and silver. And that's what I have on the menu for today. So if you didn't hear a specific currency or any trade setups that you want to cover, please feel free to throw them on the message board. Gary, the abomination. Dollar yen, sure, we'll take a look. Still kind of on the sidelines for that one, but hopefully we can get a tell at some point heading into the non-farm payroll release. So we'll take a look at the abomination. No worries. Okay, let's jump right in. As always, feel free to throw out anything else on the message board throughout the course of this session. So to get started, here's what the performance looks like for the greenback heading into the U.S. session. You can see a split performance here, pound, Aussie, CAD, all trending higher in the session. Yen is the weakest performer, down 0.41%, giving us a nice pop in dollar yen. Look, we've been looking for that pop. I don't know if this is the real deal, but certainly it's a welcomed it is a welcomed feature to see some yen weakness. As we said, heading in the start of the month, sort of a story that I'm interested in is looking for some yen weakness as we get deeper into April trade. So we will take a look at some of those crosses as well. Okay, U.S. equity markets look like this. You do have higher markets over in Europe so far. Asia was pretty decent as well with slight gains across the board. U.S. equity future markets looking a little different, not too much, but pretty much where we left it. Up 54 points on the Dow, S&P up about 4 points, 2.7 on NASI. Here, let's jump into the chart. So dollar index looks like this to start off the session. I do want to just bring your attention, well, I guess we just jump into live charts. We've been talking about this chart for a while, guys. I don't want to beat this up. Again, I know we've been kind of breezing through this every day, but the levels remain unchanged, okay? 10,055 on the near term, it stretches into 10,066, just some former swing lows. Remains key resistance. That's the opening range high, essentially for the week, 10,073 or 72. And we've continued to hold an opening range just below resistance. This is the 50% retracement of the near-term decline off the highs that we made last month. Okay, you have the median line here for the current operative structure we've been following. You have upslope median line resistance, which is also there, and those former swing lows at 1066. So the end of the day, nothing has changed on the dollar index. It continues to hold just below resistance. We've been marking some divergence, but you haven't really gotten much kickback. okay? So the key focal range still remains the weekly open for the DXY. I do think you can get one more stab into 100, essentially 101. One spot 96 or 95 would be the 618, but you have those swing lows at 101 and the median line. But largely speaking, I am looking for exhaustion. I am looking for a turnover in the dollar index. Near-term support, if we break the weekly opening range lows right here at 1 spot 37, you'd be looking for a move down into the 2015 high day close, which is a nice pivot in price. That's basically at the 100 handle. Okay, keep in mind, until yesterday, we had 4 consecutive updates into resistance. Again, pretty much had a doji on the close yesterday at resistance. Momentum's at divergence. Price is at resistance. Just looks like there's an exhaustion trade at hand here near term. So watch the near term pullback. This thing still remains constructive, largely speaking, above 100, but the immediate risk is lower, sub 100 spot 66. Questions on the dollar index. Keeping in mind, again, the major event risk isn't until tomorrow when we head, or excuse me, Friday when we head into the non-farm payroll release. Interesting developments yesterday. I don't know if you saw my tweet, but actually Lacker did resign as head of the Richmond Fed for some very conspicuous reasons. Doesn't look like he's going to face prosecution or anything, but didn't really roil markets as much as you would have expected. Anywho, technicals will continue to guide what we're doing. At the end of the day, dollar index continues to hold just below near-term resistance and the weekly opening range highs. All right, that is the dollar index, DXY. Any questions? Going once, going twice. Let's jump into yesterday's report on an update on the Aussie. So here's where we were yesterday on the Aussie. If you recall, the previous day we were also looking at the Aussie dollar. Here's what it was looking at a couple of sessions earlier. This is just ahead of this. This is at the start of the week, right? We cited a downside bias sub 76.63, which was our bearish invalidation level. We've since brought that down. I'll show you in a moment. Looking for a break below 76.22 to challenge 76 and 75.90. Basically, all of those targets got taken out. You dipped into 75.47, 75.42, and that's exactly where you found support on the rally here, looking for resistance right along that same median line. Well, it's basically what we got. Here's what it looked like last night. You got that drop right into key support. The rally we were looking for and move higher into the 75.90 level. That's the first area, first target of resistance you'd expect to see some kickback possibly on Aussie. Here's what it looks like right now. Okay, so you made that rebound off the 200-day moving average. It was also at that confluence support, was also just shy of that slope support. Here's the rally. We haven't quite made 75.90. The high in overnight trade was 75.87, couple pips off. But this is still the near-term resistance range to keep in mind for Aussie. You have those swing lows from last week. You have the 618 retracement. We're still within the confines of this range, so I will continue to use that 618. And that slope sliding parallel there. Support, resistance, sail through, should offer some resistance here again today. Okay, now with the dollar testing resistance, if you get some kickback on it, the best play, in my humble opinion, would be the euro. Remember, the DXY is largely weighted the euro, 60%. So a rebound in the, or a pullback in the DXY, in my mind, first thing would look at would be the euro dollar to see if we can get any kickback off this near-term support. That being said, if Aussie crosses 75.90 on the upside, guys, leave room for a possible rally right back into the monthly open, the 618 retracement. This nice pivot here basically gives you a range of 75.30 and 75.22. That's where the upper median line parallel is. Okay, this is going to be the broader bullish invalidation level. And as I noted last night, we're going to go ahead and lower that broader bullish invalidation level to the monthly weekly open, 76.30, as opposed to 76.60 where it was earlier in the week. All right, so bearish sub 76.30, a break here, target 75.17, 74.19. But at this point, you do want to respect this key near-term support and rebound. This is the focal range heading into the U.S. trade session. broadly bearish sub the monthly open, break lower, you got clear-cut targets. Questions on Aussie dollar? Again, we're pretty quiet on Aussie data. Going to look for U.S. data to really drive this price action, specifically heading into non-farm payrolls on Friday. All right, that's number 2. Let's keep the Aussie theme going here. Aussie yen was another one that I highlighted here. I also put this one on Daily FX. Pooja, I know that you're looking at this, and it's something that we've been following here for weeks now at this point. But looking at the Aussie dollar, look, it came into a beautiful area of support yesterday, rebounded just ahead of it. But at the end of the day, the risk was there for a little bit more of an upswing on Aussie, and it kind of bodes well with what we're talking about with regards to looking for some of that yen weakness. And specifically, since we were on the short side of the Aussie dollar coming in support, this one just seemed like a gift for me. So I hope you caught some of this. This is what the daily chart looks like. Again, keeping in mind a couple of things that I just want to bring to your attention. A, the low, okay, 84, ends up being the yearly opening range low that we made in the first day of trade for the year. Let me actually move this over to here. All right, so the 74, the 84 handle essentially, the yearly open, a little bit higher. You came into it, you tested its support yesterday, you broke, or you rebounded, you broke through it yesterday, and you closed below it, okay? Those swing lows from December still couldn't get a close below. The spike low came right into confluence support, and this kind of price action screams exhaustion, especially as momentum continues to hold those lows as the oscillator makes, as the price action, makes fresh lows. So this was an exhaustion play from my standpoint. Here's what it looked like on the intraday. Again, some near-term slope off the high that we've been following. You guys have all seen this chart before. The upper median line parallel, really nice resistance. The median line, really nice plays. Breakthrough, instant resistance, you break through, instant support. Okay, the lower parallel, perfect tag. Now, as I said yesterday, as long as we stay below 84.40, I'm mindful of a possible another drop into 83 to test it as support. Question is, are we moving off from here, or do we have to still drop that 83 handle to test it to move higher? From what the momentum signature is looking like, again, I'm more of the mindset that you look for some resistance heading into 84.50, a possible pullback. I don't think we get that, that far again. And I'd like to stay constructive again above this 50 line that you're looking at right here. So if we get a pullback into this region, possible re-entry, the longs that I have on right now, I do want to clear out as we get near 84.30, 84.39 is the exact 236 retracement of the decline off the highs. And that converges on the median line heading into U.S. trade today, or heading into Asia basically tonight. All right, so this 240-minute chart pretty clear as far as the levels are concerned on Aussie yen. I'm looking for resistance into 84.40, into that median line initially. Expect some kickback from there. You want to stay constructive near term above 83.76. Questions on Aussie yen? Here's what it looked like last night. So we were just probing this near-term resistance. That's the 60-minute chart. I'll show you the 62 so you can get a better gauge. All right, right off support, broke through the median line, basically on our way into that 84.39 target, 84.40. Questions on Aussie yen? Another one that tracks risk pretty well. So although there's not much data from either of these respective currencies over the next, into the close of the week essentially, you want to watch what the broader risk assets and what broader risk markets are doing here for Aussie yen. All right, number 4, British pound. Another very interesting pair, okay? And as I said yesterday in the webinar, and here on, on the update, I want to be long, but the question is, do we take it from here, or do we get that drop into 123? That beautiful, I think that would be a gift if we got it. heading into the start of the week, obviously, this thing was at support. We highlighted it earlier. That support was defined by the 2016 low day close at 24.33. Just lower, you have the 100-day moving average and slope support, or this 618 line of the advance of the median line that we've been following. So big support region, continues to consolidate. It's broadly a range-bound trade at this point until we get the breakout. But guess what? The weekly opening range and the initial monthly opening range taking shape just above support. Love these plays, okay? Love them. Here's what it looks like on the intraday. And here's what sterling looked like last night. Okay, so again, we highlighted that region. 240-minute chart continued to highlight this zone between 24.10, 24.22. 24.10 being a 618 extension. This is from the decline off the highs. 24.22 ended up being a 38 basic retracement from the lows. And then you have, again, that sliding parallel. Resistance, break, support, support, broadly support. That converges heading into the next few days on that key support zone at 24.10, 24.22. So for sterling, the focal range is still 24 into 25.70. I understand and recognize that's a massive range, but we have to grant where we are and that we're just starting off the month. Here's the 120-minute chart, give you a little bit better of a view. I want to be long either off the region we just came off of, which, as a disclaimer, I'm not currently holding anything, unfortunately, or if we get a dip and break back into 23.18, I think this would be sort of the gift type of entry. Again, former trendline resistance, 3-point touch, checked as support, former resistance. Another check of that support would coincide with a 618 and a 100 off the high. My favorite confluence Fibonacci levels. Okay, and they both coincide on trend. Trendline resistance, former resistance, now support. So if we get the dip into 23.18, I'm on it. What happens if we don't get that breakdown? Well, unfortunately, to attack the long side on sterling, I can't with conscience do anything until we get another test maybe of 24. If that peters out there, maybe another entry, or a break and retest of 25.70. 25.70 being the highs that we made back here in late February, and also slope resistance. So if we were to break through here on the pullback, I'd look to get long, targeting 27. Obviously, 26.70, 27 is still critical key resistance and the yearly highs. But at this point, you have to respect this near-term support at 24 into 24.22. Questions on the pound? This little consolidation range here breaks. But largely speaking, very interested in still getting the pullback. Hey, you're very welcome, Horace. Great to have you back as well, sir. Cheers, mate. Okay, that is British pound. If there are no other questions on that, we will move right along. You don't have any data, again, for the sterling except on Friday. Okay, you get those industrial production and manufacturing production figures. Obviously, we have non-farm payrolls as well, so look for the sterling data, kind of precursor, what we're going to do as we head into that release for the United States at 8:30 Eastern. All right, next up from last night was an interesting pair. Again, like I said, you don't really see me personally write about dollar ZAR too often. But over the last week and a half, what a move. I just couldn't ignore it. I had to bring it to your attention. I actually did tweet something about this back on the 27th, and here's what we were looking at. We had just made an outside day reversal off of a critical support barrier, and that was defined by 12 spot 32.75. That was a 100% long-term extension. I'll show you that extends off of. You also had key median line support for multi-month, okay, formation that we've been following, and that all converged right there. That outside day reversal turned out to be the start of a 13% plus rally in just a matter of days. Obviously, now there's some political fallout here for what's going on in South Africa and all that good stuff, and I completely get that. But at the end of the day, the levels are the levels. And this thing is coming into some not only long-term moving averages, but also some long-term structural resistance, which is offering some kickback specifically on the closes. I'm going to preface this before we jump into the charts, guys. This is not a trade that's light, for the faint of heart. If you're someone who's new to near-term trading, whether it's intraday or intra-week, not going to be your best, option to get involved with or operate on. But certainly when the opportunities are there, I'm going to highlight them either way to you guys. So here's what it looks like on the charts. Okay, the daily chart yesterday highlighted this key region. Basic trendline resistance extending off the May highs from last year, tagged again in November, converged right here. You have the 200-day moving average in green, which also converged right there, just higher, the 618 retracement from the decline off the August highs of last year. That gave you 13 spot 82.12. Now we sailed through all of them, but look at the closes. Right? Obviously today we're making another push. We're trying to get through that 200-day moving averages, but despite all the wicks you just saw on the candlesticks, on a closed basis, we're still unable to clear this range between the 618 retracement, the 200-day moving average, and trendline resistance. Okay, this needs to close up here for this to be a break. Obviously today we're trying again today, but we're going to have to see where the close is. If today makes a third and final, I don't know it's going to be final, but if it makes a third failed attempt, it still screams exhaustion. It still screams exhaustion. No matter what's going on in price, you can see that the momentum hasn't really been able to cross 70 on the upside. You're coming up against some pretty big Fibonacci and longer-term levels. I do want to note that the stretch high came just pips shy of the yearly opening range high. I should probably highlight that for you. It comes in right here. Okay. Before pulling back. So, Mike, does that mean we're bearish? Not necessarily, but near term, the exhaustion possibility for a near-term exhaustion reversal is there. Initial support at this point, you want to bring right up to this key region. This is your monthly open, former trendline support, and a basic 38.2 retracement of the advance. All converge at 13 spot 31.76, 13 spot 33, this region here. Okay, on the intraday charts, looks like this. Here's what it looked like last night. Okay, very, very, very basic. I didn't want to complicate this. All it is a basic retracement of the advance, some slope support off the lows, extending off that high, caught that high. Again, highlights 13 spot 31.76 is a 38.2 monthly open. Also, near-term slope support. A topside breach, well, 14 spot 1769 will be the first area of resistance I'd start to look for. So you have a lot of room if this thing makes a breach of the upside play. Okay, near term though, the immediate threat is for a little bit more of a pullback in price. Again, constructive above 13 spot 31.76. I know it's an awkward pair. An odd pair typically doesn't really have a very nice ATR that's comfortable for us, and typically not the best spread, right? We all know this. But nonetheless, showing some signs of possibility for exhaustion on the near term for $ZAR. Questions? What a rally. I mean, this thing, that's just nuts. We're way up here right now. All right, next up on tap, that was number 5. Next up on tap is silver. And I just wanted to cover this because we've been covering silver in the webinar here like every day. And this slope is just insane. I wanted to highlight that silver was once again starting to approach a key resistance range. That key resistance range is defined by 1833 into 1836. We talked about it at length earlier in the year, back in February. Here's the daily chart looks like. That's defined by the 100% extension of that initial leg off of last year's December low. the January high and the subsequent January swing low on the 26th. That 100% extension confluence with the 50% retracement literally caught the highs that we made in February, almost perfectly, along with the upper median line parallel here for this current operative slope. On the downside, look where we found support, right at the lower median line parallel. Once we broke that 50 line, again, you're automatically looking for a stretch to the upper 50 line. But guess what? Ahead of that, you still have that key resistance at 1833, 1839. And that's what we're testing now. Okay, so weekly, monthly, opening range taking shape just below resistance. Another ideal play. Watch 1839 as key resistance. Watch support right at that 200-day moving average. We talked about that yesterday, 18. You got a 40-cent range to look for a break over the next day, day and a half to get some guidance here on silver. Ultimately, I do like it higher, but a break below 18 would suggest that you have another downfall towards the 50 line, towards the lower parallel again before you make that break. This is the threshold for the breakout. Once we clear 1840, you're looking for that 50 line, but ultimately you're looking for a rally into the 19 handle, which would complete not only a basic 618 retracement of the entire decline, but also would match those highs that we made back in November of last year. So I just love the levels on silver. Again, if you're trading on the futures markets or if you're trading with Forex.com where you're able to trade gold and silver, these are levels of which you want to keep mapped out in front of you. Definitely as we get deeper into the month and the dollar starts to give us a little bit more volatility in play once we clear out NFPs, I think you'll get a much more clear definitive break of this range. Look for 18 into 1840 to give out. Questions on silver. I know a lot of you in here trade silver, so let me know if there's anything on this that you need further clarification on. Here's what the intraday chart looks like. Again, I'll bring it down to a 240 just to show you, but the cleanliness, the preciseness of this formation cannot be understated. Okay, the 50 line, really nice pivots, really nice pivots, really nice pivots. The median line doesn't get much clearer than that. The upper and lower parallels catching the highs and lows for the last 2 months. Okay, so on the near term, topside breach above 1840, you're looking for 1858. That would complete a near term 1618 extension, or excuse me, 618 extension off the major advance off the low. And then subsequent targets, again, like I said, up at 19 would be the subsequent sort of max topside target you look for. Sub 1800, look for the correction down towards that lower parallel. So a lot of these commodities, some of the currency crosses still holding their opening ranges really tight. It might be frustrating if you're looking at it intraday and you're trying to squeeze out a position. But guys, the longer the opening range holds, the more definitive the break will be, the more conviction we have on the subsequent trade. And ultimately, the better, the better off we are. So patience pays in this business. And so far, we'll be looking for a break of this near-term range. That's number 6, testing resistance, silver. Any questions on silver? All right, moving into the previous session's update, I do want to go over Euro Dollar, Euro Key, Euro CAD, and Euro AUD, some of the Euro crosses that we've been covering. Euro Dollar looked like this earlier in the week. There's really no change to the levels. There's been a slow dribble lower, kind of probed below support, then it came back. Haven't really been a fan of the Euro and haven't really done anything with it so far this week. But here's where we are. Here's where we were back on the 3rd, and we're still trading at those same levels, okay? So watch support at 106.52. Like I said, we dribbled below it yesterday, but we closed well above it. You're still looking at a weekly opening range taking shape just above a key Fibonacci consideration at 106.52. Resistance into 107.14. Look for a break of this range. Broader trade is constructive above 105.80. Actually, at this point, I'm going to choke this up to account for slope. Keeps the broader focus higher, well above 105.90. So I don't really have much to say on the euro, guys. Does anyone have any questions specifically on euro dollar moving forward from here? All right, moving right along. I guess most of the fun is in the euro crosses, more so than the euro dollar. So here's euro dollar. Again, feel free to take a snapshot, guys. I do see some new names in the room. At any point, you can take a snapshot by clicking on that camera button in the top right-hand corner if you need to refer to these charts later. But it is the same exact levels that we highlighted back on the 3rd, so no change on that. Euro key looks like this. Well, it looked like this earlier in the week. And basically, we were talking about the fact that, look, this was coming into support plain and simple, okay? Above 151.20, there was a risk for a much more substantiated rebound. You had the 200-day moving average that you see here in green, and you had slope support for this slope that we've been following since the highs of last year. It caught the lows pretty darn well. Really nice median line, sliding parallel, another sliding parallel from that low, caught this low, caught this high, break, support, support, converges on the 200-day moving average. Moving into the 240-minute chart. As we started the week, we wanted to note again 152 was holding as support. Okay, that was the range lows. It was the median line of the descent here coming off the highs. And again, that red line that we looked at on the daily chart, that longer-term sliding parallel, converged right there. Okay, here's what it looks like on the 120-minute chart. And here's what Euro Kiwi looks like now. Okay, so the support did hold, and we did see the rebound that we were looking for. But that rebound is now at resistance, and that's why I wanted to curb everyone's appetite here. So 52 held as support. The rally now coming into 53.15, which is the level that we highlighted on Sunday as the level to watch as resistance. Also, if this is a break of a basic upside pattern, break of support, check of resistance, this should hold if this break is legit. Okay, as I said on Sunday, I'm not a big fan of Kiwi strength. I'm not the guy who wants to go long Kiwi. So I would rather continue to play the long side on Euro Key. That being said, you're at resistance. Okay, we need to see a topside break above 53, specifically on a closed basis. If we get it, I think you're on cue. I don't really think there's much in the way of seeing a lot more of a substantiated rally. Critical resistance isn't really until 54.50, so you got plenty of room. But this is near-term resistance for sure, and Friday's highs from last week. You want to be mindful of that heading into the U.S. trade session for Euro Key. Okay, I'm going to go ahead and bring up our bullish invalidation level from 150 down here. I want to go ahead and bring that up to basically the weekly opening range lows. As long as we stay above the weekly opening range lows, those stretch lows that we made, continue to favor seeing if we can't get that topside break in Euro Key. That's number 7. Oh, that's number 8. Questions on Euro Kiwi? Immediate risk heading to the U.S. session is for this resistance to offer some kickback. Okay, so if you're holding long exposure right now is where you want to be taking some off. Looking for that pullback, again, constructive above the weekly lows. Moving into Euro CAD, here's what Euro CAD looks like. And here's what Euro CAD looked like earlier in the week. So for Euro CAD, very similar situation. Okay, the daily chart was highlighting that we were coming in some near-term support at that 141.91 level. It's the basic 50% retracement. I personally was looking for another stretch just to probe that 50 line. You didn't get it, okay? And actually, we did probe higher yesterday. That being said, the levels in the focus range still remains unchanged, okay? 41.92, 41.91. Now the monthly, weekly opens, and the 50% retracement does still offer some support. Specifically over the next 2 days, those converge on the median line, so it continues to highlight this as near-term support and the range lows for the month. On the intraday chart, here's what it looks like now, and here's what we look like earlier in the week. Okay, so we didn't quite make it into that December high at 143.60. I still think you get a chance, or you have the threat of it. But remember, for EuroCAD, the caveat I have is this. Broadly speaking, I like Euro strength. Broadly speaking, I like CAD strength, right? So what do we do with that? Well, if we take a look again at the broader structure here, I wouldn't be too concerned or wouldn't be too surprised to see some more consolidation, right? You're stuck between the 200 and 100, I said that backwards, the 200 and 100-day moving averages. Okay, I wouldn't be too surprised if you see some more back and forth action, back and fill, until we get a little bit more of a definitive opening range for the month and a break. That being said, key thresholds to keep in mind, basically the 200-day moving average at 143.50 into 143.90. I'd give you that whole 40 pip range as resistance. This is the low day close from back here, back in October. Nice high stretch here from back in November. Nice pivot this year and converges on all these median lines. So I'd give it 143.50 into 143.90 as resistance. Key support, the monthly opening range lows, 141.74 into 141.90 as key support. Intraday looks like this. Okay, there's that key support on the downside. There's that key support on the upside. Like I said, I wouldn't be too surprised to be one more stretch into here, but I am looking broadly for some exhaustion on any further upslope here in EuroCAD. I still like dollar CAD lower. I like CAD strength, guys. So I don't want to take too much of an aggressive stance against that position. At the same time, I don't want to load up on all this CAD strength because if CAD falls apart, I'm going to take a shellacking on both sides, right? So be mindful of the positioning that you have on various pairs that you're not overloading on any one side. Any questions on EuroCAD? The 1 euro pair that I'm a little bit more torn on from where we are right now, just because CAD strength seems to be something I'm still looking for. So you don't necessarily, not necessarily my favorite setup of everything recovering today, but something we'll be watching. Euro Oz, Pooja, this is for you. Here's Euro Oz. All right, so I love where we turned from. You're short from 141. Nice entry. So you're about 20 pips in the money at this point. Look, the area of which we turned was beautiful. Here's what Euro Oz looked like earlier in the week. Here's the Sunday update. And here's Euro Oz. So we had talked about the fact that this thing was coming into slope support. And you know, right off the bat, to open up the week, we were talking about the risk for a rebound higher into the lower parallel. Key support confluence 139. Broader focus remains lower. From a trading standpoint, I'd be interested in short-term entries on a rally towards the 50 line. Basically, that's what we just got. Okay, there's the 50 line. It moved off support. We came into the 50 line. You got the entry there, Pooja. Very nice. And here's the pullback. So you're looking for initial targets at 140.51. 140.15, I don't want to stress. I'm going to remove that as a target. This was a former swing high, and we did get some play a couple of weeks ago, but recent price action hasn't been all that inspiring. So I'm going to drop that. And I'm going to leave 140.52, and then key support, Pooja, is right back where we started the month. Monthly open, 50% retracement, gives you key range of 39.53 into 39.68. And again, that converges now on, you know, the lower median line parallel, the current operative descending median line, and like I said, the weekly opening range low and weekly open and monthly open all come right here in this little pocket of support. Make sense? That was big. This was a nice turn off resistance. Really nice turn off resistance. Okay, so basically, I don't think there's any change to these levels. The only level that you want to change here is dropping that 40.15 mark. Okay, just drop that level. 40.50 is still in play. My targets are 40.56 and 39.76. 39.76. What's at 39.76? What do you have there, Pooja? Just that low? 39.75. Right ahead of this. Yeah, perfect, perfect, perfect. You don't even need to answer me. That's exactly what I would be looking at. And Pooja just brings up a good point, guys. I typically will trade like this as well. All your targets for intraday positioning or intra-week should be on the inside. If the retracement's at 139.68, don't put the limit at 139.68. Put it at 139.70. Put it at 139.71. Give yourself a little bit of a cushion. Because you hate to see something like this where we just missed the retracement literally by 3 pips, 4 pips, and now the market's already off 20 pips and you've lost your entry or you've lost your exit. So just keep in mind, I'm a big, big advocate of doing that, okay? Shave off a couple of pips here, shave off a couple of pips there, but guess what? Ensuring that the trade is triggered is the most important thing. So I love both those targets. Yeah, absolutely. Right on. And once you clear 40.55, Pooch, I don't have to tell you, but that's where I'd have my stops at break even or better at that point. Okay, that is Aussie yen. Any questions on Aussie yen? Euro Oz. Nice, nice, nice trade. We were looking for support early in the week. We got it. Looking for that rally towards the 50 line. We got it. From here, I think you need to be mindful of a little bit more of a pullback towards the lower parallel and support. Pooja's at break even already. Nice. Well done. Well done. All right, so let's jump into some of the commodities, and then we'll take a look at dollar CAD for sure and dollar yen for Gary. First things first, just a quick update on gold. There's really not much here that's going on. I did just want to note that we are seeing that reversal that we were looking for. We've been talking about gold at resistance for the last 2 weeks. Every time I seem to say that, it pulls back and then it rallies for the next 3 days. So I don't necessarily want to get too aggressive, but look, guys, this is the third and failed attempt at the 200-day moving average. I mean, I'm not just making this stuff up. It's just what the charts are saying. Here's another. First attempt was back here in February. That failed. Second attempt was back here in late March. Again, that failed. Here we were again yesterday trying to break 200-day moving average. Again, that failed. Now we're sitting basically at the monthly open. So look, we had divergence into those highs. The spill did find support at a key juncture. The resistance is at key resistance again. And on the near term, I just think you treat this as a range. I don't really think you want to start positioning for any major breakouts in either direction at this point. I do think you can see a little bit more downside to go, but largely speaking, the trade still remains range bound for me over the last 2 weeks. Okay. So watch 1241 into 1258. That's really the key range that you need to focus on for gold moving into the start of the month, heading into non-farm payrolls. I do think you see a break of this range heading into the close of this week. Michael, look at nat gas, please, in commodity sector. Yeah, sure, Vlad. I'll take a look at nat gas for you. Nat gas. But any questions here on gold? I don't really think there's much of a play. Look lower immediately. I do think you look for that support heading at 1241, heading into that former parallel that we've been following. Really quick into crude prices. That was number 9. That was number 10. That was number 11. Crude is number 12. So we do have inventories on tap in just a few hours. Here's what crude prices are looking at right now. I'm treating this as a breakout, guys. We've been talking about crude coming into resistance at 51, and we talked about 51 for a while. It broke. It's at 51.60. If today closes above 51 or north of 51, that's a breakout. It's pointless for me to continue to favor the downside over above resistance, right? So I'm watching this level with great interest. Near-term support now gets, near-term support now gets, near-term support now gets lifted up to here. This is the monthly and weekly opens, the 50 line, and former slope resistance. All converge right here. That you don't need. That you don't need. Topside targets 51.97 would complete a 618 retracement of the entire decline. You got some former swing lows at 52.22. Here's what crude looks like on the daily. The breach of this region not only invalidates basic trendline resistance off the yearly highs, but it's also the 200-day moving average and took us back within the confines of the initial yearly opening range, which was taking shape all throughout the course of January and February before breaking in early March. Again, looking for resistance 51.16 to 51.97. You have that 618 retracement. Could see some kickback off there, but guys, I do not want to try to pick pennies in front of this train. It looks like it does have a little bit more stretch to go on the upside before you turn over. Broadly speaking, I am looking for exhaustion. I still think you'd see a move lower, a strong move lower here in crude, but as it stands right now, you need to be respecting this rally, looking for resistance as close as you get to 52 as possible. $10.30, crude inventory. Don't forget it. Nat gas, might as well just jump into that for you right now real quick. Vlad, looks like this. Nat gas. That'll be number 13. Okay, let me just clean this up. We don't need all these levels. Yeah, I don't really like these steep slopes, but let's just see what happens. Dun dun dun. We got something here maybe of interest. This is definitely a huge region of interest for sure. 1346 into 346 and 354. Near-term support. Okay, so off the most recent advance, I do want to just take, this is the trigger I would use in momentum. Okay, so here's what I would say on this, Vlad. Again, as a disclaimer, I'm not really a nat gas trader by nature, but this is what I'd be looking at from just what the technical setup is saying. 335 is a level of importance. Just ahead of that, you have that slope coming off the lows. I don't want to necessarily stress it, but look, it's gotten some really nice touches. Here's support, here's resistance, here's support, here's resistance, pivot break. That comes in basically just above the high we just made in overnight trade. So for exhaustion reasons, for sort of a initial resistance tag, that's the first area I'd look if you're holding long exposure. 335 being a little bit more of a critical area of resistance, I would love to book profits or look for exhaustion, i.e. downside short scalps off that region. The broader trade's still constructive though. I do not, wouldn't want to take a broader bearish bias on this. But certainly at this point, after the magnitude rally that we've gotten, I'd be looking for targets here to possibly offer a pause in price on this advance. Even the momentum signature, you're not getting much divergence just yet, but so even if you have the downslope here of the most recent decline off the highs from December, you could see that the lower median line parallel caught a really nice break of the resistance of the upper median line parallel held a support, and that gives you further conviction of a near-term breakout zone here in price. So I don't really have a strong opinion on it, Vlad. I hope that helps, man. I would just be mindful, again, for what it's worth, be mindful of that near-term slope, basically 330, and then 335 is going to be that 618 that I would definitely want to keep an eye on. Constructive above 309, a topside breach, you're looking for 346, 354. So the levels are clear. It's just, again, it's not always about knowing the level. It's about having a game plan, right? So how would I play this? Well, I would play either on a stretch back into this support against these lows to try to get long, or in fact, if you get an exhaustion play into one of these levels, it might be decent for a near-term short scalp here in nat gas. Also, keep in mind this is paired in dollars. So if the dollar pulls back dramatically off of that resistance level that we were looking at earlier in the session, it might give this up, further upside fuel here on nat gas to take us towards that 335, 346 target. Make sense, Vlad? It's a quick, crude look, I guess I would say, at nat gas for you. Dollar CAD looks like this, and then we'll jump into dollar yen. Vlad says, yep, got it. Cheers, Vlad. Crude prices looks like this heading into, we went over crude prices. Dollar CAD. Dollar CAD. Here's dollar CAD. So, a little bit frustrating. You got that scare in overnight trade, or yesterday, I guess I should say, into the U.S. trade session. We saw this thing just surge through 134, 134.30. I wanted to see this hold. My personal stop was just ahead of Jamie's stop, and it didn't get triggered, thankfully, because we did pull back off that level. But look, at this point, if we get back above 34.30, I'd be concerned that this thing is going to plow right through the highs again. I'm still looking for exhaustion. I do like a hold below these levels. We would need to see a move sub 33.18 to even get this thing going. It might be more of a hopeful trade right now, this late in the game, but we'll see if we can't get anything today with that crude inventory. If crude prices start to move more aggressively, it might fuel some strength in the CAD. And again, we're looking to play this lower in dollar CAD. Keep in mind, we did break this near-term slope. Okay, so yeah, I didn't want to see that either, but at the end of the day, coming in back and testing this as support would still put us in the money. So we'll see if we can't get a decent playback in dollar CAD. Let me clean these levels up a little bit. Hold on one sec, guys. Actually, bear with me one sec. I want to see if this completes anything. Oops. Okay, so that was also 100% extension right there at 34.30 that we sailed through and then failed. So I'm still going to favor near term, looking lower below 34.30. Need to see a break below the weekly opening range lows, the weekly open, the monthly open, the 38.2. That's all at 33 handle. Pooja, does that help? You're short from 34.36. Okay. So you're basically with Jamie on that one, right? I think our short entry was 34.30 on the swing side of trades, with a stop at 35.40, which is against these highs. Yeah, I like it, Pooja, but it doesn't. You took the words right out of my mouth. Great minds think alike, my friend. She says, yeah, it doesn't look very encouraging right now. Let's see. It doesn't. But you know what? That's typically not a reason for me to jump out of a position. There needs to be something materially that changes from a technical standpoint to pull me out of a position. Otherwise, if you start managing every position on a tick-to-tick basis, you're going to jump out of some great opportunities. And I'm the first person to tell you that, just from personal experience. So look, 34.30 is still going to be my near-term threshold. If we break the highs, so be it. That would be a break of the weekly opening range high. It's Wednesday, and I would be looking for the rally towards 34.76 and 35. But as it stands right now, I don't think we're necessarily shaken out just yet. The stretch high that we made yesterday, Pooja, I'm encouraged when I see this kind of price action. So when price shoots through a major resistance or structural resistance that you're looking for, and then we close much lower on this session, that type of snapback, this was almost a 60 pip snapback before closing, is certainly encouraging that there's not much up here. There's not much tolerance for market price in this region. And again, I'll continue to favor Let's see if we can hold against that key resistance. Last but not least, dollar yen. Haven't looked at it this morning. Let's see what the Yenski's doing. Oh, right. Weakest performer so far in this session, yen. So right back at resistance, no change whatsoever. I'm not really sure if you guys even want to hear anything on this. Who's asking about this? This was for Gary, right? Gary, it's the same exact plan as yesterday. I need to see. Here's what we looked like on the 28th of last month. I need to see a breach above 1145 on a closed basis to really get this thing going with more fervor. Remember, this is what we look like, again, at the close of last week or at the start of last week, right? We stayed below that region the entire time till Thursday, but the breach above, guess what? We came right back and closed the week right below. We opened the week saying 111.45 is resistance. It held on the Sunday-Monday stretch. New Tuesday low, Wednesday coming right back into the monthly open, quarterly open, weekly open. Opening range highs takes you into 11.58. That's still resistance. Okay, I want to be long dollar yen, but I need to clear this godforsaken range. It's a huge, huge pivot range, huge. Former swing lows, former swing highs, 38.2 retracement, slope support, all stacked up. So it's been in a range. You want to clear that range. Just pop above 1145 would be the first sort of step in the right direction. And I do think that if we, if the yen story does materialize like we're looking for, I would love to try to play this. But Gary, for me, the yen crosses are a little bit more of interest than trying to fight this dollar. It just doesn't look like it wants to do anything. The dollar is just kind of quite contempt to do its own thing these days, which is very frustrating. I just want to see what this looks like. Okay, too early to tell if this will materialize into anything that we want to necessarily follow. But it does highlight the same exact regions. Here's the Friday highs that we made last week as a target on the breakout above 1145. Support, I would put at those swing lows. And mark that right there, 110.62. Okay, so that'd be the near-term targets I'd be looking here for dollar yen moving forward. Constructive above 110.63, cautiously. At the end of the day, Gary, very, very important, man, is that this thing has just set a weekly, monthly opening range right below resistance. Look for the break. Pop side above 111.45 in my mind would be the first initial move you'd look for. 112.20 pop, that would be the breakout zone. That would be the breakout zone. Make sense? Others have been comparing the Nikkei 225 and yields are much higher, so the abomination lagging. Just wondering what your opinion was. So yeah, I mean, dude, Nikkei 225, we've been all over that. I know you've been seeing this chart, right? Here's the Nikkei 225. I'm not really sure why it's not loading. And if you hear that in the background, that's the market open. So I do have to run. But look, Gary, real quick before I leave, I'm not sure what you're looking at with Nikkei 225, right? Because it just broke a major key support barrier. So yeah, this is a level that you'd need to clear to get back on the bullish side. So we talked about this major key resistance earlier in the year. Okay, 19,676, 19,636. I know everyone here in the room has seen it. The downside break certainly shifted the focus lower. We took out both those targets. You really can't get constructive on the Nikkei until you get back above, northbound of the low day close for the year. Okay, and that's right here. So, let me move this here for you, and let me clean this up a little bit. That's the region you need to clear to get back anywhere constructive on the Nikkei 225. Otherwise, you're still risking a drop into 1858, 18,584, 18,596. Those correlations do tend to hold. Again, for a near-term guy like me, Gary, I don't stress them. You'll see deviations in intraday price action all day long. If you try to take a corollary stance on an intraday position, you're going to get, it's going to hurt. I'll tell you that much right now. So yeah, I definitely see, the correlations will be something that you'll want to take into account for longer-term, medium-term positions. But as it stands right now, dollar yen has got a very definitive, clear opening range for the week, and that's what I'm going to focus on moving forward. He says, cool. I don't know what those other been on about that regarding the Nikkei. Yeah, Gary, an easy way, man, to avoid confusion, just watch who you guys follow on Twitter. There is a lot of noise, guys, out there. Whether it's technical guys who have their own, their own way of doing technicals, I guess. I'll say it in a polite way. Or it's whether the fundy guys who really want to take a fundamental story and try to press it on a near-term price action or a near-term play. Let price be your guide, okay? And try to avoid all the noise out there, because you will get confused. There's no shortage of opinions, that's for sure. And that's what makes a market, guys, right? We want people to be bullish. We want people to be bearish at the same time, but we don't want that to impact what our objective thought process is on the markets. So that's just one thing I want to impress on you there. With that, we'll go ahead and wrap things up. Quick housekeeping, guys. The email will go out later tonight for the SB beta signals. If you sent an email requesting confirmation over the last 24 or 48 hours, guys, it hasn't been responded to, because literally there's over 100 emails in the box for everyone asking for confirmation. The email will go out later tonight. So if you don't get the email by tomorrow morning, and if you have any questions, you can feel free to reach out to me at that point in the webinar. But it's going to have a simple login. You don't need to do anything, guys, to start the service. We're going to have everyone who's a beta enrolled already good to go. You will have a login for Alert FX if you do want to turn off the alerts for any reason, but certainly we're really excited about that, and we should have that out to you later tonight. With that, guys, I'm going to go ahead and wrap up the session. Thanks for everyone who attended. I will see you all bright and early tomorrow morning. Best of luck trading. We'll see you then. Cheers.